Welcome, everybody. Thank you, first of all of those of you guys that came here on time. And thank you for all the new people that are here. I see some new names. This call right here happens every single Monday night. It's called the Rookie Roundtable. And people come from all over. We have Eventbrites that promote this call. We have my Instagram, my social media. So, people are coming from all over the place, people that I just recently met, or people that have been here for over a year. So this call has been here for a while. We have a really special guest here tonight. I'm just going to share a little bit and say hello and welcome to all the new people that are here and what this call is about and what is expected, and what we're going to go through. So we're going to go through the agendas. So first of all, I want to say just a little couple quick announcements. One, we are going to be starting the Teen Millionaire Challenge here in about 2 weeks. Myself and this guy right here, Tim Mai, we are running a Teen Millionaire Challenge. So we're going to teach teens how to buy multifamily real estate. We're going to be matching teens up with very successful people that are already in the industry, and the goal is to make millionaires out of teens. So feel free to check it out. Go to teammillionairechallenge.com if you, your kids, or if you know anybody that wants to be involved. It's free. There's just time commitment and there's an application process. So definitely get that in because we are starting September 23rd. I will be one of your facilitators in there. I will be teaching mostly on mindset. So a lot of you guys that have been here know that I am huge on mindset. So today's agenda, I'm just going to do a little bit more of an introduction, teammillionairechallenge.com, Andrea. And then we're going to have our special speaker join us and we're going to get to know him a little bit. And I will introduce him and we're going to ask him some questions about financing, how and the debt market and all of that stuff. So that's going to be really exciting. And then afterwards, we will have a little quiz. No, sorry, a little game just to see who's paying attention. So as the call is going on, Nick is going to be creating a game. It's going to be about 10 questions, maybe 12. And we will keep track of a scoreboard. So there is a leaderboard that goes on. It goes from week to week. And at the end of every quarter, we announce the top 3 places and we will give prizes out. And then the best part of the call, well, actually, I don't know if it's best, but it's a great part, which is for the last segment of this call, you will get a chance to be broken out into a breakout room with 5 other people where you get to network. Okay, so the whole point of being here is to learn something. So if you're going to learn the state of energy in which you are here and how you pay attention and how you listen is going to determine the value that you will get out of this. And then the networking part, which is, I've seen some amazing relationships built and people telling me that, wow, our relationship started on your Monday night calls. So I've gone to so many different conferences and people tell me that they've met their partners, their business partners, their real estate partners, their Zoom partners, and just amazing people through here. So the community is awesome. And the reason why the community is awesome is because I'm going to say that there's really just one requirement to being here. And that requirement is to be kind to everybody, to be kind in your thoughts. That way we can create a safe space for people to ask questions and have awesome aha moments, right? So if you have any questions, if any thoughts come through in your mind, you're like, I don't really get this, feel free to raise your emoji hand, which you go down on your Zoom and go to reactions and hit raise hand. We're going to call you and you get to ask your question. Just know that if it's in the space, if it's in your thoughts, it's meant to be here. And part of being on this call is you also get an opportunity to muster up the courage to speak in front of people. Okay, speaking in front of people, if you have a chance to do so, anytime you have a chance to do so, do it because it's going to expand and help you network better. Okay, so with that being said, I don't want to take up too much more time. We've given 12 minutes now for people to hop onto the call. For those of you guys that are here now, thank you for being on time-ish. And I'm going to bring up and introduce our special guest here tonight, Robert Damigella. Where are you? Let me see. Okay, so Robert is the vice president of capital markets at Marcus
Capital
Millichap.
Markets and Marcus and Millichap. Yes.
Awesome. So if you guys don't know who Marcus Millichap is one of the biggest brokers in debt and finding commercial real estate in the country. They are nationwide. So Robert is sort of a big deal here. I think we've done 3 deals in which you've helped us find debt, right?
I think I've done a few with you. Yes, for
Okay,
sure.
cool.
Absolutely.
Awesome.
Yeah.
But before we get there, so anybody that I bring onto this call are people that I have personally worked with or that I believe that they offer good service. So I've vetted people. I don't just bring people onto this call because I feel like, ooh, I don't have someone to bring onto the calls, right? These calls are people that I have vetted or that I have worked with. So Robert is somebody that, I really admire and what he's been doing. So from the first time that we met at Grant Cardone conference, I thought
Yep.
he was just a really cool dude. And congratulations too, right? You are due for some congratulations on
Yeah. Yeah.
on being
She
loped now.
finally asked. She finally asked him, and I said yes. So,
Okay. Was that
so
how it went down?
yeah, that's how it went down. Yeah, sure,
Okay.
right. Believe that
All
one.
right, right. Okay. So I don't believe it, but
No, don't believe it for a
congratulations.
minute.
It looked beautiful on your Instagram, and I follow you in what
Thank
you're doing. So cool. Why don't you share a little bit
you.
about yourself, and then I'll ask you some questions about you. We'll learn about you first, and then we'll learn about things in
I
multifamily.
always like to talk about myself, so that's easy. And what I first want to know though is where can I buy, Alex, that DJ voice of yours? It's a phenomenal voice, and yeah, exactly. So
Good equipment.
yes, thank you for the kind words, Alex, and I'm really honored to be here. And it's been a pleasure working with you and knowing you over the time that I've known you. In fact, we just did a Q&A on another program
Yes, we did.
recently with Robert
Mm.
Martinez. So
Hmm.
we answered some questions there as well and worked together on some other items. But yeah, so I'm here and I am vice president of capital markets with Marcus and Millichap in Boston. I basically head up capital markets in New England. And for all intents and purposes, all I do is finance deals all day, every day. In fact, over the course of my career, without being too detailed, I've probably financed about $3 billion in debt and equity over the last 30 plus years that I've been in on Wall Street and Main Street. So I've seen a lot. I can't say I've seen everything because some things do still come up that surprise me, but I've seen a lot. So there's plenty for us to talk about and plenty for me to share with you in terms of both my background, which I think is appropriate, and as well as where things might be going and how I can help people to get wealthy and fulfill their dreams in multifamily investing.
Mm-hmm. Awesome. So how did you come about what's your story? How did you get into this space? Give us a quick rundown of how you got to where you are today.
Wow, you got all night? I mean, that's good, guys.
The Cliff
Uh,
Notes version.
when you put up 30 years, yeah, but I'll try to keep it as briefly as possible. I was on Wall Street for years, senior vice president with Lehman Brothers for a decade. Everyone knows what happened to Lehman Brothers. As clearly we know why I'm not there anymore. Um, but I'll kind of fast forward to the most recent rendition of my life and my career because it's most germane here. It's most interesting here. I don't know if I can see a show of hands. Has anybody here seen the movie The Big Short?
I
Anybody?
was just about to say that. That's
Right?
great.
The Big Short. Well, I want to tell you guys something. Do you saw that movie? It was all about the subprime mortgage crash. Guess what? I was not a bystander. I didn't just watch the movie. I lived it. I lived it literally, and it was an amazing and in many ways unfortunate experience that I went through. That we lost Lehman Brothers, we lost Merrill Lynch, we had a massive meltdown. But at the time, I was running about $100 million plus hedge fund and related to real estate. what we did was we bought whole loan mortgages, pre-securitization. If I lose anybody, let me know. And we would do workouts on them by large pools from Wall Street firms and actually work out the mortgage. So if you were distressed in your mortgage, you weren't paying, we'd work out a deal with you to either take the collateral and liquidate it or give you a discount to get your loan functioning again. Well, having a whole portfolio of real estate mortgage assets, it melted down. And with that went the fund, my net worth. I did find myself living with two pre-teenage girls as a single dad, living off credit cards because it got bad naturally, as you can well
Wow.
imagine. But my skills in financing deals is really what's saved my butt. And we can talk more about it. And I know this is sort of where you're involved, is that I was able to rebuild my net worth. For, in fact, the very first multifamily transaction I did using the skills that I have and other people's money, I was able to, in one first deal, rebuild my net worth to $1 million. Deal one, and it's doable, totally
Yeah.
doable. So that's kind of
So
where that came from. But
yeah,
anyway,
yeah. So this is something that I say a lot on these calls is the things that you learn, right? It may take time, right? He has experiences and all the things he learned and all the things he applied into real life scenarios. Nobody can take that away from him. Right?
no,
Nobody could take that away from you, even though you lost it all and it was scary. And I'm sure it was. I've been down the road where I
yeah,
lost everything.
yeah,
And I was living in like a 175 square foot little closet with my 95-pound dog.
yeah,
And I was blaming the world. I was blaming everything, feeling sorry for myself. And the same thing, the skills that I learned through real estate and the failure of my restaurant business and the people that I met, right? Actually, it's the people that I met that helped me get out of the thing that I was in where I lost everything and feeling sorry for myself.
yes. Nietzsche said, if you look into the abyss, it'll look back at you. And when you see what's in there and you've got the courage and the character, is where you can turn your life around. Or even if you haven't, you just haven't started yet, but you have what it takes to actually build a life, and it's
Mhm.
out there. So yeah, so that was that part of it, and then I ended up at Marcus and Millichap. They recruited me in, and I built out the entire Marcus and Millichap capital platform here in New England, to which is now where all I do is finance deals for rich guys like you. So
So wait, I want to go back to that movie real quick. For those of you guys that have not seen The Big Short, watch it. It's really
amazing.
interesting and they explain it so well too.
Yes, they do.
They explain it's like for dummies, really, and not like you guys are dummies, but if you know nothing about real estate or about, what's going on in the markets and mortgage-backed securities and all that, they explain it so well. Now, during that time, people were selling a bunch of junk securities, right? Is that kind of what really happened? And what was that experience like when you started to see everything kind of collapse?
Yeah, well, and that's why that's a great question, by the way, and sort of to drill down to really what it was is that when what Wall Street does and has did before and still does today, they package up all your home mortgages. Any of you that own home mortgages, they package them and they call that what they call is securitizing. So they package them into a bond and they offer that bond to investors because the mortgage interest pays a bond yield. So what happened back then was they only had so many mortgages. So they really let the requirements to write a mortgage lapse and get really, really lenient so they could have more product to stick into these mortgage-backed securities because they were so damn profitable. And then I don't want to complicate it, but there was also a lot of derivative products that came with it. Again, I was on Wall Street for a long time, so this stuff I understand. It's very hard to explain, but derivative products in ways that it was these things were leveraged multiple times to what they were already leveraged. So it was just a house of cards that just collapsed in on. Now it can't happen again. Well, I can't say it can't, but it shouldn't happen again with the changes that have been made, and it shouldn't happen in commercial real estate because it's a different animal.
Mm.
But at the end of the day, that's how that all occurred, and it was pretty nasty. And we thought we were ahead of the curve on it because we were buying already distressed debt. But No, we didn't really get the big picture. So we saw a collapse of a very large portfolio, but I did manage to save my investors, which is an interesting story. If you want to hear another story, I sat there in the tatters of this mess in my empty office, trying to figure out what to do. And it dawned on me that I called my lawyer and said, what can I do with this LP portfolio, limited partners? And he said, you can do whatever you want. So I converted everyone to all the shares, the limited partner shares, like the limited partners that go into the syndications. I converted them to shares in a mortgage REIT, restructured it, went out and raised a little more capital to then go to the street. There was a wall of maturities coming out there, and started to then put money out as bridge debt. Once I put, I don't know, 25, 50 million out, we got an offer from a public company to acquire it. So it was acquired and everybody got their money back.
Wow.
Save money.
So for those of you guys that are completely new, limited partners are your passive partners that invest into something. Robert was the manager of the fund, and
The
limited
GP.
partners, the general partner,
Yeah.
and Robert is basically LPs basically invest money in and say, okay, Robert, you run it, give us the returns, and really has no say in what goes on. And so, part of vetting a general partner and being on a team is to also know who's going to be looking out for the investors first, right? Because when shit hits the fan, people will look out for themselves and their family first, right? So this is a really good indicator in the story that you share right now, speaks volumes to also who Robert is and how I've also experienced him. So it's congruent in that.
Well, thank you. Yep.
Yeah. So kind of going a little bit more into, a lot of people are like, oh, well, it's 2008 all over again. And I'm like, no, it's really not. So can you give us kind of like a very simple, help us understand why it's not the same thing?
Yeah, no, and I think again, more great questions that really cut to the nature. I mean, I think that there is probably a bunch of opportunity coming in the commercial real estate side, but I'm not talking about from a collapse standpoint. In fact, economically speaking, I can give you a full argument on why we think there's potentially very strong potential for a soft landing here as we come out of this spate of increases in interest rates, which are creating hopefully a slowdown in the economy, so that rates can begin to come down again. But we have two different animals here. We've got residential mortgages versus commercial mortgages. We're here to talk about commercial multifamily real estate. I could probably opine on this all night long, okay, but I won't. Back then, on the residential mortgage side, you had extremely lenient underwriting criteria, and people could put little to no money down. They were able to just buy properties with virtually no equity in them, very low requirements to approve them, to confirm that they actually made the money. They were stated income loans, and so forth. So if you bought a property for $100,000 and you had really no equity in it, what incentive did you have to stick around if things didn't go well and just keep making a mortgage payment? You didn't have it, right? Gone. So all of these combined with the inner workings of Wall Street that I mentioned to you about over leveraging and synthetic products and derivatives and so forth, all came together to make the perfect storm on that side. On the commercial side, different animal. The lenders, and I mean, first of all, and I say this very definitely, believe it or not, it's probably easier to get to these days a loan and a commercial loan to buy a 20, 30, 50, 100 unit apartment complex than it is to get a home mortgage. And that's because of the way that commercial real estate is structured. You're going to have more equity in place. Right now, these days, it's going to be 30 to 35% minimum, okay? You have multiple cash flows to debt service your deal, which means that if two or three, you've got 20 or 30 units and two or three of your tenants stop paying, you're not going to miss your mortgage payments. They're very stringent in how they underwrite the deal. The debt service coverage at over 1 to 1, you always know it's at least 1.25. And, just the fact alone that you also generally get some sort of guarantee by KP or someone behind it who's going to be there to secure if there is a default. And then there's already a ready market. There's a ready market for people that want to buy these assets because they're so attractive to own. And then I could go on. There's, we've even got, Fannie and Freddie there, which for anybody that may or may not be aware, and please stop me if I'm just going on. I said I could opine over this all
Yeah,
night.
so I think it's a little bit on this call. A lot of people are, very beginner. If we
Okay.
go on to our underwriting Thursday calls, so for those of you guys that are, want to learn more and actually get, begin to start this process for yourself, Thursday nights I teach this also for free, and we go through some easier underwritings, and you'll learn some of these terms. Now, if you don't understand it fully, it's okay right now,
Okay.
because some of these words might fly over your head, but just
Right.
understand that it's not the same thing. Because what Robert is saying is that back then in 2007, 2008, they were just letting anybody buy properties, anybody get onto loans. They didn't have to pay that much, right? To no
Yeah.
down payments. I know
Yeah.
people were getting money just to buy properties. It was crazy.
Right.
So
Right.
that's
And
just not sustainable. And then today with commercial, which is different, people are seeing some blood on the streets for commercial because of the interest rates and some other uncontrollable stuff. But it's not that the lenders are loosening their criteria in which you need to hit to follow,
in
right?
fact, they're tightening them right now.
Yeah, they're tightening. They're making it harder to get. You have to jump.
Yes.
You have to make more things happen in order to get the deal.
Yes. Put up more money too.
Mm-hmm.
Mm-hmm.
So
Yep.
so right here, Donna said it in 2011, in 2008, she got 11 mortgages.
Wow.
11 mortgages.
Wow. Donna, I think
Yeah.
you created it all on your own.
So Donna actually wrote about this getting 11 mortgages in a real estate book for women. There was a bunch of women that came together and wrote a book on real estate. So Donna, if you want to stick the link in there, feel free. And she talked about her buying these properties in that time. So okay, cool. Thank you, Donna, for sharing that.
Thanks, Donna.
So what are we seeing in the market today? So we're going to talk mainly about multifamily, commercial real estate, commercial debt. So, we're going to put residential aside for now. A lot of people understand residential, but the
Right.
basics, how do we, like, for someone that doesn't know anything about commercial mortgage, let's get the basics to them. What's the difference between commercial and residential?
Um, I think that how much money you make and your credit score are not nearly as important for commercial real estate, which is again counterintuitive uh, as compared to what you would do. It's not really based on what the difference is. I'm going to try to keep it simple. The residential mortgage is based on the homeowner or the home buyer, their income, their net worth, and their ability to pay and manage that debt. Whereas conversely, multifamily debt is based upon the value of the asset, the cash flow of the asset, the financials of the sponsor, and really that's it. So there's a major difference there. And I don't know if I've made that contrast clear, but it's a lot, easier, I think, to get, or a lot different to get a mortgage on a multifamily property when you've got multiple cash flows and
Mhm,
great collateral versus
mhm.
just one person paying a mortgage every day who, conceivably could lose a job. And that's a big difference.
Which presents a great opportunity for every single person on this call today. Because, Robert, for someone that has no experience, no money, no credit score, no nothing, can they still get into a deal?
Yes. I mean, look, we all know the legendary Grant Cardone, and the legendary Grant Cardone, who I'm on a call with him every week on Wednesday. And he talks all the time that, what, the biggest mistake that many new investors make is they don't become LPs first, just to kind of learn the ropes, understand how it works, get some money out, and see how it works. Now, having said that, and to answer your question, yes, qualified yes, though. Can a newbie come out and find a real estate asset and buy it? Even though they haven't had any experience? Yes, they might have to bring an Alex in to maybe be a KP or a co-investor with them, or someone with some experience that can work alongside them. But generally speaking, yes, it can happen. And I think it's a lot easier to find a KP that'll invest in your deal for a multifamily property than it is for residential, because someone's just going to co-sign residential, and if you lose your job, they're stuck with it. However, if you KP someone, which is key person, okay, I want to make sure, don't just throw terms out. A key
Principle.
help me out, Alex. A key
principle.
Key principle. You really don't have any liability at the end of the day. The asset is there to protect you, pay, and have to get liquidated, you'll be released from the transaction. So yes, in fact, new people, very new, do your work, learn how to finance deals, but you can, yes, do deals without a doubt.
Yeah. So, and here is why people would KP deals, because one of the things that Robert said that was really important right there is because it's called a non-recourse loan. You can get a debt that isn't recourse to your to me or whoever is going to be the key principal on a deal. That means it doesn't really, they're not personally guaranteeing it. They're just saying, hey, I have the net worth, I have the experience, I have the liquidity to sign on to this loan. But ultimately, that loan is really just attached to the property. Am I right on that?
Yes, you're right. And I would also add, Alex, you probably know this already, but just to clarify for everybody, even if you take a recourse loan, the recourse is only in place for whatever deficit there is from the loan amount. So you sell the property, if you owe $1 million and it only gets sold for 900, then you only are responsible for that 100. However, in the market we're in, the demand for multifamily properties, I don't think you're going to see that ever. Maybe you can, but very doubtfully happening anytime soon. There's really not a lot of risk in terms of being a key principal. So if you can find someone that'll help you there, and you understand how to present it to them, you can let them know they can make great returns, but not be at any kind of terrible amount of risk.
Awesome. So for I don't know if you guys are actually capturing the importance of what is being said right here. For every single one of you, what you should be looking for now is for somebody that is willing to be a KP. But what you want to do is you want to find out what would they be willing to sign on to. What is the checkbox, right? If you go to a KP, someone that has the net worth, and say, can you sign on to a loan? What are their checkboxes? They're going to say, well, do you have any experience operating? Because they don't want to operate. The whole point of being a KP is to use your net worth to make more money.
Right.
They're not going to KP and operate the deal for you. So then, okay, there goes one thing. I have no experience. Who do I need to get on board so that now we have experience too? Then they're going to say, all right, well, do you have somebody that's like, boots on the ground, somebody that can oversee the property that's there? Oh, well, I don't live there, and neither does this operator. So now you know what else to get, right? So there's a bunch of things that is just simply what you want to be listening to is, how do I make it happen? And every time you get a no, it just means you need to go find another piece of the puzzle. And this is why commercial real estate is so great, because it's a team game and everyone can do it. Now, should they start as a general partner? That's up for debate. Some of us think, no, you should probably be a limited partner first. I also take that stance, because when you take somebody else's money, you need to know what that responsibility is and what does it feel like for somebody to write a check to you. So you need to know what it feels like to write a check to somebody else, because it takes trust.
Ride the bus before you drive the bus, without a
doubt.
Yeah.
I mean, I drove a Tesla before I rode the Tesla, but it's kind of, it makes sense. Now, can you do it? Yes. Are there people that are capable of doing that and doing a great job? Yes. Right.
Absolutely.
A lot of skill sets transfer over from the residential side. If you're already doing real estate for a long time, if you raise capital, if you built, if you've managed a bunch of single families, some of those skills will transfer over and be great for a team that is doing multifamily.
For sure. I agree with you.
Somebody had a question. I just saw a hand up. What just happened? Did we answer something? Amelia, was that you? Okay. Well, moving on.
Yeah.
What do we see? Oh, hey. Hi. Yes.
Are we allowed to ask questions now? I don't know.
Yes. Everybody, if you have questions, if you're lost, please raise your hand and stop us, because this is about educating and giving you guys, the know-how. If you're lost, it doesn't make sense for us to even continue talking. So
Right.
yes.
There's no bad questions for sure.
Okay. So my question is like, when it comes to structuring and doing larger multifamily deals, what is the difference? I'm trying to figure out like how it makes sense, right? What is the difference between having like 100-unit apartment building and you're getting this, you're structuring a deal that I think might potentially be more risky and might potentially like require less cash flow for an individual, as opposed to acquiring like 100 different single families, and it's kind of easier to get like a residential loan as opposed to like a commercial loan. Does that make sense?
Yeah.
Is it?
Isn't it? I don't.
Is
Yeah.
it easier to get 100 single loans versus 100 unit
I don't know.
commercial loan? Go ahead, Robert. You take
Yeah,
it.
yeah, no, thank you. I think it's a great question because we hear this kind of thing all the time. I'm going to compare it to our current multifamily transaction here, and by telling you about this particular transaction, it'll give you your answer. Okay, we have almost 200 units, and there's a place called Southbridge, Massachusetts here, because I'm up in Boston, and the 200.
Mass.
What's that?
I'm in Western Mass.
Oh, no kidding. Oh, so
Look at this. Great.
who Southbridge is, right? These are in Southbridge and Worcester, all right? And it's one seller. It's two portfolios. But here's the thing, Emil. The property's not selling. And I'm telling you, it's less than 100,000 a unit. Cash flows, Alex, it's like a 7 cap. Okay. And admittedly, Amelia, Southbridge and Worcester are not downtown Boston, but they're not horrible. They're not horrible, not great. But Alex, there's 32 different buildings in this portfolio. So that's 32 appraisals, 32 roofs, 32 heating systems, windows in every one, blah, 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 blah. Need I go on? Multiple mortgages. It's too complicated. Too many moving parts that even a multi-family portfolio like this is not being sold. So in answer to your question, I would much rather own 100 units under 1, 2, or 3 roofs, okay, and then 100 single family homes with all the moving parts and whatever else could go wrong with that, and the financing and the appraisals and the costs. So I definitely would say to you, try to keep the number of roofs to a minimum.
Okay.
Yeah. You always save money also on all levels when you have more units under one roof, in terms of management, right? Imagine you have what's the management company going to charge you if they have to travel to 100 different properties? Like, that's one thing, right? Versus all under one roof. They can just go to one place and everything's done there. Your transactions, I mean, how many times are you going to be sitting in a title? That's the worst for me right now.
Yeah.
Like, every other month I'm going into title office and signing a 100-page paper. That takes time, and then I got to go notarize things. If I'm not in state, I got to receive it, go notarize it, sign it, send it out. Like, it's a lot. If I did that 100 times, instead of one time for 100 units, just that in itself is too much work.
Yeah, that's too much brain damage, as they say.
Yes.
Thanks. So on the flip side of that, I'm trying to be transparent about my fears and also overcome them. I always think about like, because I own condos, and my biggest fear is like, if somebody hired a plumber and they were on like the 8th floor to do work, and the plumber didn't do a good job, and then there was a leak or something happened, so all 8 units below, and then water travels, so then all of these people are displaced. You've got 20 units displaced, as opposed to like if I had 20 single families and one person had to be displaced, it would be much more manageable. So I don't know. And I guess, as you start to do it, you understand how to navigate through the flip side of that. But that's one of my fears, or if the whole building burns down or the whole building gets bed bugs or something.
Well, you want to diversify your risk is what you're saying by buying multiple separate units. Is that what that says to you? You diversify your risk. You have a leak in one, doesn't affect the other 99. Right.
Yeah, I think so. I mean, I like to outweigh the risk versus rewards, and I like to look at things from like every angle, because being in real estate, I always try to anticipate the unanticipated, which I never fully do because there's always something that happens but that's one of my fears. And so I'm like, well, how do you kind of
Right.
overcome that?
Sure. Alex, you, me?
Sure. Well, if you want to take it, you can take it. I have a great answer for it too.
Well, you got a great answer, so go ahead.
Okay, so let me go first. So I own a lot of single family and now a lot of multifamily too. When I look for a plumber for my single family, I don't care who it is. I call my maintenance person. I'm like, get them in there, fix it, right? I don't even know if they're insured. I don't even know if I just need them to be the lowest price.
Yeah.
Okay. I care a lot about price. Now, our bigger units, I'm like, management company, just give me 3 quotes and we'll just say yes or no to it. Make sure they send in their W-9s and they have insurance, they're all of that. Whatever happens, it's at least there's insurance. They're a more reliable company, right? And they'll cover whatever damages if it happens. I don't have to deal with that. Like if I've had plumbers do work in my single families, and then I have to go find another plumber to fix that. So it ultimately ends up being more expensive. When you have more units, you have a property management company that handles it for you, right? So you don't actually have to lose any sleep over it. They handle all of it. And they work with it. They work with a reputable 3 different quotes, right? They pick 3 different quotes, good people. And you it doesn't hurt you as much because you got so many units paying for that one building versus one house.
And I also own multifamilies as well. And for example, a couple buildings that I have, you're here in New England, so in North Providence, Rhode Island, I have 24 units there.
Nice.
And I had a flood in the basement, in the laundry room, and whatever the pipe broke or whatever, flooded 2 of the apartments, flooded the laundry room. Everything had to come out, new kitchens. But yes, we went in, they did the work, new kitchens, everything's updated, insurance paid a good chunk of it, and end of story. I agree with Alex. It's far better.
You lose no sleep over it.
No sleep.
If this happened in your single family, you will lose a whole week of sleep over it. You're going to be going crazy. You have to stop everything you're doing. Your kids or whoever is going to be like, oh my God, I can't even get to hang with my mom because she's so stressed out, and you're yelling at people for no reason. You're mean to people. It's just overall, I mean, all of that is just, doesn't make sense.
Don't worry about the 100 units. If you can put one up and do it, you'll be happy. As soon as you do it, you'll say, well, what did I even think about this for? Too much analysis, right, Alex?
I know exactly where you're at though, Amelia, because I was there. I went to Grant Cardone's conference. I was like, why in the hell would I give up my single families that myself and my wife runs, and this is our full-time job, for something with less returns? We did have a flood. We had a flood in one of ours, and it went down and it damaged other units. I never even thought twice about it. I carried on with my day. The management company handled it. The next week, I was like, hey, how are we doing? They're like, oh, it's done. Great. Like peace of mind, freedom, those are things that become more valuable to you as you start to scale. And when you focus on those things, you focus on acquiring assets that will continue to do that, and it allows you to scale. Otherwise, 12 single families was the max that I could handle, and it was a lot.
Yeah.
And now 800 units later, I'm like, none of these even remotely add up to 2 or 3 of my single family. So now we're starting to let them go. So we have now closings coming up in the next couple of weeks for the single families that we're getting rid of. Okay, so any other questions from you?
from me, oh, I could ask questions all night, but
Okay, well, we'll continue to talk. I'm glad that you're here. Thank you. And thank you also for bringing your daughter onto the teen call.
Thanks for your question, Amelia. That were great questions.
Okay, is it Nagar?
Hi, it's Nagar. Yes.
Nagar.
Hello.
Hi.
Hi. Hello. Yes. First, thank you so much for all of these. You talked about LP and GP. So my question, a couple questions on that part. Is it better, you said it's better to do the LP first, but is it not better to do both LP and GP to start? I have this analysis paralysis syndrome. I'm like, I get into action, I've been watching you guys for months and I gotta get into action. And the other question I have is, can you guys go over steps 1, 2, 3? Where do we start? I mean, finding the KP. I went to this 3-day workshop, and by the end of the the third day, I'm like, oh my God, it's such a big deal to find a KP. I thought it was such a big deal, but now Alex talked about it like very casually. I guess it's not as hard as I thought. It's like you have to beg people to please be my KP or something. I don't know. And finding your team, the asset manager, the property manager, the lender, and what else? Underwriter. All those. So which one goes first? I mean, I'm just so overwhelmed. Where to start?
You want me to go or you want to go?
All right. Well, to again quote the Grant Cardone, which I think is he's just a master, but he does say, find yourself a deal, then find your debt, then find your equity. Those 3 steps in that sequence.
I'm sorry, say that again. Find your deal.
Find your deal. Find a deal, secure a deal, then find your debt, then find your equity. And I think that as a framework for your work, for what you're trying to do, that's a great way to look at it. Now, in there, becoming an LP or a GP, he says become an LP first so you can kind of, again, ride the bus before you drive the bus. You can be a GP and LP at the same time, depending on how you structure, without getting too complicated. A syndication, you can be the GP and put money in the LP area for LP returns. But I think GP is probably something you'd be better off to grow into, even though you can start that way. Mm-hmm. So yeah, I mean that's how I look at it. Alex, I'm sure you have some feedback there as well.
Yeah, and I'm gonna add, before the deal, you gotta learn the game. Okay, like before you even find the deal, learn the game, because I know so many people that ended up on a GP team and only to find out that they don't even want to be there and there's problems, and you'll learn that's a hard way to learn. You can either learn through your own experience or you can learn through other people's experiences, right? So it's about learning first. I'm also going to say that learning, probably the 3-day conference that you went to, at the end of it, their whole thing was, hey, join this educational program so you can continue learning, right? Because that's the point of these 3-day conferences. Usually people that throw these conferences are not making money on the conference, but they will make it on the mastermind or the course or whatever they're selling. Okay. So when you go to these conferences, chances are you will find yourself leaving feeling like it's harder without that, right? Mm-hmm. So being part of these calls and asking these questions is important because you want to find clarity around it. It's also not what you know, and it's not also who you know, but it's not also what Grant says, but it's who you trust. Mm-hmm. Okay. So it's not what you know, it's not who you know, but it's who you trust. So technically, if you were like, I'm going to be a GP, you have to find it in yourself to say, I will fully trust somebody to take you through it. I did that. When I first started, I was like, okay, I'm at this Grant Cardone conference. I'm like, I joined the mastermind. Cool. But in order for me to get into a deal quicker, yes, Grant Cardone says, who knows you? who knows you matters later, but it's who you trust, right? Trust is the ultimate game. This game is a relationship game.
It's relationship, all relationships. Yeah.
Behind every transaction, behind every contract, behind every computer screen is a person. GP is general partner, not GB. General partner are the people that operate and run the deal, and usually that is their active income. An LP is the limited partners that invest into the deal and gets the mailbox money. They don't really have operational saying
Right.
or says.
Right.
But again, that also comes with trust. So the whole thing is, who do you trust? Who do you feel good with? And that's something that you're going to have to find, like when you're on these Zoom calls, right? I hope by being here today that you will meet somebody, or you feel like, okay, I can work with somebody here, and go with that, right? Roll with it. It's going to be relationships.
Absolutely. Absolutely. And being in these kind of groups it's an investment in your future, and I can't tell you enough how important it is. I'm in the industry, so I'm a little different perspective. But when I listen to knowledge of people like Alex and the expertise he's able to share. It's well worth it to you. And the people you can meet, make friends here, work together on deals, bounce deals off one another. It's super important in your future. But build that team. Start to look at some people who could be KPs, people with an interest in real estate. Start to look at people who could be LPs for you, and build that knowledge. Because even if you get in the GP spot, you got to know what you're doing, because you're actually dealing with investors' money now. So now you got to know, like, I got to pay the preferred rate of return every month. I've got things I've got to do. You've got to send stuff to the account at the end of the year, 1099 reporting. I mean, there's a lot of stuff that, K1s, excuse me, has to get done at year end. That comes, but you learn that being an LP because you're receiving a K1. And now if you become a GP, you've got to produce a K1. Am I right, Alex?
Yes, for sure.
These are the kind of things that's a tax form that you get for your income. So, I think you're on the right track by doing what you're doing, but it doesn't happen overnight.
So what I'm understanding is to become an LP first, and then that way you can learn the business, and then
I'll tell you when you go to a conference, the best way to network is to make everybody know that you want to be an LP.
Yeah.
You will have people flocking to you, and you get to pick who you want to work with.
Yeah.
The second you're like, hey, I got money, I need to invest in the deal, you will have people flocking to you, and then you get to pick.
Right.
Okay. So
and then you can learn about GP.
Well, and you'll learn people, right? You'll be like, oh yeah, I don't like this guy. This guy is just, he's crowding me. He's not giving me space. You'll learn people really quickly, and
which I've experienced. I've experienced that.
Yes. And it's people that are doing deals get around. If they get around, that means you have to just ask around, right? Hey, how's your experience with this person? Right? I promise you, if we're gonna do a deal and we have a deal, I get around. People know who I am, and you can ask around. Right? So that's all you got to do. Same thing. You ask around. Hey, how's Alex? How's Robert? Everyone knows Robert as well.
Right.
Now, if you ask about some other, people out there that are doing deals, ask around. A lot of people are invested into deals. The circle's pretty small. They'll tell you how they're doing in the investments in the deal. Everyone's going to tell you.
Oh yeah,
so it's if you do this is the due diligence part for you. So everyone that is here, it's pretty easy to do due diligence. You just have to be focused and ask the right questions, which you just did right now. So kudos.
And one other thing, sorry, about deal analyzing. So is it important? I'm sure it is, right? I want to know your opinion on that, to know how to, before you get into anything, even LP, I assume, to know how to at least do deal analyzing, not the full underwriting.
From my perspective, looking at those 3 steps that I mentioned to you earlier, get the debt, get the equity. This business is all about finance. It's all in the numbers as far as I'm concerned. But that might be my perspective because of what I do. But at the end of the day, I think Alex would agree, almost every conversation for every deal ends up a discussion about the finance of that deal. It's always about the finance. So should you learn, you need to analyze and underwrite. You don't have to be a full-fledged underwriter, but you need to be able to at least analyze the deal, understand how it cash flows, debt services, you know, the basic fundamentals, so that even if you're hiring a mortgage broker to raise your debt, or you're going into an LP deal, you understand what reasonable internal rates of return are, or preferred rates of return, or expected returns in a deal. Yes, so analyzing a deal is absolutely a must. And I think it's a great place to start, by the way. I don't know if Alex, you agree, but I think, you know, starting to learn how to analyze and underwrite deals, even on a basic basis, is probably really important to you understanding the business. You agree, Alex?
Yeah, for sure. I mean, you know, even the most basics when you're even in residential, Rich Dad, Robert Kiyosaki used to say, go do 100 deals, underwrite and analyze 100 deals. So
Yeah.
your first goal might be, let me underwrite 100 deals. Put it on paper. Make a little mark every time you've underwrote a deal. I promise you, by the 100th deal, you will be an expert in this. Knowing how to do this is
Yeah.
like such a small part. Everything else, the courage, the confidence, the trust, the relationship building, those are the important things. Knowing how to play this game is pretty easy. So
Right.
just go and underwrite a bunch of deals and you'll be good. Join our Thursday night calls, and you know, we'll underwrite deals. We'll teach you.
Perfect. Thank you
Cool.
very,
Thank,
very much.
thank you
You're
so
quite
much for
welcome.
asking.
you.
Okay, we're gonna take 2 more questions, and then we're gonna do our quiz, and then we're gonna do our networking. Okay, so go ahead, Hector.
Thank you, Alex. I remember when I met Alex the first time, he said, "Hector, this is not a race; it's a marathon," and that stuck in my mind because I think I was like Nigat at one point to try to figure out what I want to is going to be my role in the team. And the second thing that Alex told me was, "This is a team game." Like example, I'm not good at underwriting. I don't want to know anything about underwriting. I want to find deals. I want to put the deal in front of someone who knows how to run the deal, and that way it's easier, and I know what I'm doing best, and I know who I'm going to rely if I need help. But my question for Robert is, Robert, in regards of verification of funds, let's see, you have a deal under contract. And the funds that we need in order to close that deal, you guys verify, I mean, how many days before closing those funds needs to be verified? I mean, I know some people, they use fund to funds or syndication money. So how you guys, or how many days in advance you guys look for those funds in order to be ready for closing?
That's a good question. And the answer is it depends. I had a business school professor that told me most of your answers, it depends. And it really does depend. I bet you get, if you're looking at deals, I bet you get brokers that say, can you verify funds? Am I right? Okay. I also bet that if you were to get past that process, you'd get further along in the potential of getting a deal. Often, most of my clients that we're dealing with, it's part of the underwriting process. Never, ever, and this is where your knowledge and demeanor of the vernacular of the industry, to be able to convey that you understand how to do a deal. No one ever asked me for verification of funds, and I bet no one ever asked Alex. But when you get a deal under contract, that's where it'll begin, and that you're going to have to provide a personal financial statement. They're going to look at the liquidity that you have, and that's part of the underwriting and escrow process with the lender. An agency, they're going to want to make sure you've got, it's like 3 to 6 months liquidity. They're going to want to verify that in the underwriting process. Once you have the deal under contract, you've identified your lender, and during that process, if you're getting asked, if your question is, if you're getting asked, I'm gathering is probably very early in the process, which is slowing you down, you need to change your approach, and you need to gain your confidence and knowledge so that you come across as a more.
I think his question, Robert, is actually, when you have, like, how long, like when you're capital raising before the close date, do you need to show them that you have the funds? Is that correct, Hector?
Anywhere within the process. That's what I'm saying. The underwriting process. Obviously, you know how it works. We're going to get the deal in. We're going to get the offering memorandum. We're going to get the expenses and income. We're going to get the rent rolls. We're going to get all that in. Then we're going to get the PFSs. And On there, we're going to look for, where's the liquidity? It's never an issue prior to the underwriting process. There's no specific date. They might ask for that on day one. There might be just towards the end of the
What about the funds to close the deal?
It's demonstrated there in your liquidity,
Mhm.
right? I mean, it can come up where a bank says, well, I'm looking at your PFS and you need 2 million to close, and I see you only have $1 million here. This could be a week before closing, could be a month before closing. Where's that money coming from? Oh, by the way, he's selling a property in Iowa, and we're going to have that other $1 million come in. Okay, done. And end of conversation. No one is asking us to provide bank statements, very rarely, sometimes, but very rarely, to prove those funds. So it's not a hard, fast rule is what I'm trying to say to you. It's more of how you deliver yourself and what your financials look like. And that determines if anybody's really asking for you proof of funds. And proof of funds is a proof from your bank that you have equity.
Yeah. So Robert, we're going through a loan assumption right now, and Freddie is kind of slow right now with the loan assumptions. I guess everybody's doing it. So we finally just got our close date for October 5th. But after they get the whole package, right, that has the proof of funds, the underwriting, and everything, that the broker basically says, okay, it's approved, they give it over to Freddie. We're looking at like 2 to 3 weeks usually when Freddie gets it before they give you a close date. So that's kind of what happened on this deal. I don't know if that's what you're seeing.
No. You're talking about Freddie now. Freddie's going to be looking for that proof of liquidity. What do they want? 6 months payments, minimum liquidity, plus whatever their liquidity requirements are. But that's going to be in those 4 to 8 weeks prior to closing. That's part of the underwriting process, maybe even sooner.
Well, so Lumen is who we have to work with because we're assuming this debt.
Right.
And Lumen is saying, okay, well, we need to gather all of these things,
right,
so we can review it. And once we reviewed it, then we give it to Freddie. Then Freddie takes 2 to 3 weeks. So there's a period of time that you got to have the money ready. That is before the close date.
Sure, absolutely.
Right? So otherwise, you're going to have to extend, which we did.
And that's especially with Freddie, because they're looking for that liquidity up front. They want to make sure you've got the liquidity to handle the deal if there's a problem.
Yeah. Yes. So the lender matters, Hector. Basically, depends.
It depends. Yeah.
There's your answer. It's a long, dragged out answer. It depends.
I was trying to give examples of all different ways that it could depend, but it depends. Yes.
Yeah. Okay. Awesome. Thank you. Thank you, Hector. Okay. Last question. Brigitte, welcome. Hello.
Hi, Alex. Hi, Robert.
Hi, Brigitte. How are you?
I'm good. I have 2 questions.
Yeah.
Make them fast.
Yes, one of them is, you said 1, 2, 3, find the deal, find the debt, find the equity. Can you explain, how do you find debt?
You call Robert.
You call me. That's all. I'll get it for you.
So the question is, I don't understand the actual sentence. Finding debt.
What you ideally want to do is put together, I'm going to keep this short, Alex. You want to have some sort of a finance request package you put together, which goes through, and this is part of underwriting and analyzing the metrics of the deal, what the debt service cover is, what the loan to value is, how much money you're looking for, how it's going to cash flow. You put that together, and you'll give that to your bank relationships that Alex has had you building for the last 6 to 12 months, because you're supposed to be building your relationship with lenders, as well as deals, investors, everybody. However, you could also call a broker like me, who has probably deeper and more well-known relationships. They can help you to package your deal.
I see.
So that's how you can find that. So there's a couple ways to do it. If I'm you, this is not self-serving. I definitely would get yourself connected up with a good broker who can help you to get your deals underwritten and closed and in front of lenders.
Got you. Okay.
So Robert, if somebody was, do you have another question? Actually, no, let me continue this real quick. If Brigitte's got a deal, she got the OM, what information do you need to give her at least a guidance of what interest rate she should be putting in her underwriting so that she can actually give you the right things? And is that what you want?
Yeah, I mean, that's easy. I mean, you can, anybody that's out there, it's only limited hours in the day, but if Brigitte split me an email or a text and said, hey, I'm modeling up a deal right now, what do you think is a rate I should put in there? And I'd say, where is it? And she'd say, wherever, California, whatever. I'd say, put this rate in there based on our market knowledge in the marketplace. It could be plus or minus 2 standard deviations at the close, but that's what you can model it with. And that's how I would handle that. You've got to get
standard deviations. Someone's got to look that up for me.
I'm taking AP stats. I know what that means.
Any of my statistics students would know what that means.
AP stats.
Come on, man. We're only supposed to need to have 5th grade math to do multifamily, not AP statistics. All right. So, Brigitte, do you have another question?
Just one very quick.
Okay.
Can you break it down again? Who do we need for a deal? KP, GP, LP, management, just real quick, so I can just have some kind of understanding of who I'm looking for.
You want to be the GP? Is that what you want to be?
Yes.
Yes. Okay. So you need definitely a KP. If you don't, I mean, it could be worth $1 billion. I don't know. But if you're not, you probably need a KP that's got significant net worth as well as some experience. It wouldn't hurt you to have a few select GP partners, 1 or 2 or 3 maybe, not 10, but a few that have some experience and can work with you on managing the deal, on closing the deal, on managing the investors and so forth. And as far as, LP investors go, that's relationship you have where when you say, hey, we've got this great deal, it's going to return you 21% IRR and 2.5 times your equity multiple. You want to put some money in, and they do. Then you need a legal team to do your documentation, which is for your PPMs and all that documentation, and probably a good accountant and a good lawyer to close your deal. Pretty much that's about it, I think.
You're going to learn all of this too.
How many LPs do you? Yeah, I know we will. It's just jumped into my head. How many LPs do you suggest for a deal?
There's no number. It's the dollar amount and the size of the deal.
Okay.
You know what I mean? And for me, on my deals, and Alex, I don't know if you do this. I have when I have my LPs come into deals, like I've had guys that have said, I'll take the entire LP deal. They love the returns. And I'm like, no. I would prefer to spread it out 10, 15, 20 LPs, because now you've got more people to work with for future deals.
Mm-hmm.
Right?
That's exact. I love that, because your best lead is going to be the person that recommends the next person to you. So technically, yes, if you want to move faster, you want to work with more people. People are always going to be the solution to your problem. Okay, so we have now gone a little bit late, so we're going to do the quick game. But Robert, hey man, thanks for being here. Can you put your contact info in the chat so that people know where to contact you?
Sure.
And
yeah. Hey, Alex, do you mind if I give a little plug about my upcoming webinar Wednesday?
Hey, let's do it. Plug it.
All right, just anybody here, I'm going to put my phone number and my IG address. And there's a link on there if you want. We're having a webinar Wednesday night on financing your deal. So I know there were a lot of questions here. I know Alex has got a great program, but it's free. And if you want to join us, feel free to jump in and hear what we got to say. I think, Alex, you might want to join us too. So
yeah, you're going to be doing this on the regular?
I am going to be. Yeah.
Cool.
It's been a choice of mine to help out others in the last decade of my career. So.
All right. Well, if you want to, we can. Yeah. Okay. Cool. We'll talk more about that. But yes, so Wednesday night, plug it. Put all your stuff in there.
Can I put a link in there, Alex? Is that no?
You put your link. Put whatever you want in there. However, people are going to contact you.
I'll do that.
Guys. Plug away.
All right, guys. Thank you so much, Alex. And I'm going to stay on. That's okay.
Hey, I have a quick question.
Yes.
Robert, do you do new construction for multifamily? And
I do,
especially modular.
Modular, I don't do. They're a little harder to do. I mean, I can do them, but I have done mostly those assets which are ground up stick type stuff, not generally modular prefab.
Oh, okay. Yeah, I'll connect with you offline.
Thank you. All right, Alex. Thanks so much. I'll be off here in a second.
Yeah, sure. So I vouch for Robert and I endorse the things that he does. So you can put your contact info, put your Zoom link or whatever registration for tomorrow. I would highly suggest, if you guys want to continue this conversation, to go to it. Okay, so Nick is going to set us up. Yeah, Nick's going to set us up with a game. So if you want to participate, click on this Brightful link. Well, actually, first, before we go there, I'm going to take a selfie or take a group picture. How do I get myself off of this? Oh, remove spotlight. So one of the best ways you can wait, what? How do I get myself off, Nick?
You're not on
Okay.
Spotlight
One of
anymore.
the best ways to connect, guys, is to take a picture of this Zoom and tag me on Instagram or tag each other. Okay. If you tag me, I'll get to know you and then we will become Instagram friends and we will move towards being real friends. So take a picture, tag me, tag whoever else that you know right here. My Instagram is at Alex Lovely. And yeah, I'll reshare it. And this is a good way for us all to get to know each other as well, right? So awesome. And the more people you invite to this call, the bigger the network becomes and the more possibilities of partnerships and meeting your somebody that's got the key to your problems, right? Is probably gonna be a person, not just money, right? We never have money problems. We just have lack of an idea or lack of a resource to make those problems go away. All right, so yeah, take a picture here. We're gonna do the game. So everyone click into this Brightful thing. I'm gonna copy it and I will join too. Let's see who's been paying attention.
I'm saying all the questions are good this week.
Okay, so Andrea is not gonna have a complaint. Is that what you're saying?
I mean, I'm not gonna promise, but I'm pretty sure there won't be any complaints.
Oh my God, what happened?
So it's very quick, one-step process to join this game. It's pretty fun. Okay, we have 12 people. I'm going to share my screen. So if you're not playing, you can watch. If you are playing, look at your own browser. Don't look at the Zoom because then you won't be able to click anything. So right now we have 15, 16 people in here. We have a leaderboard that's going on every week. The first places, it's kind of like Mario Kart, right? First place gets 5 points, second place gets 4. At the end of the quarter, we will announce who is our top 3 winners.
Oh, how do we do it?
Nick, post the link one more time.
Okay, so if you click the link that says trivia in chat,
Oh.
it's gonna ask you to sign in on our web browser.
Yeah.
And
What, I lost this. Where is it?
it's in the Zoom
WhatsApp,
chat.
in the Zoom chat.
Okay.
So it's a link. So for those of you guys that, the last quarter that finished, we gave the top 3 places free ticket into the multifamily mastery course that is now on week 2. We are still gonna open. There's a couple people that just joined in this week, so for $500 and the partner, so really $250 a person, you can still join, and it's on Tuesday nights at 8 p.m. It's everything I know about multifamily, social media, and the mindset that it takes to get into your deal. So Nick, if you want to post that link in there for anybody to still want to join. It's an awesome community. Okay, also, don't miss out on the networking that happens right after this game, which you get to meet new people.
All right, we're at
The
24
reason why
people.
you're here. If you've been here for an hour and change now, like, don't miss out on meeting somebody that could possibly change your life. All right, one of the things that I just I met somebody really awesome here in Vegas, and she told me that this line right here made me a big fan of her. She goes, "I don't work for money. I work for you changed my life." That is the best line that I've ever heard. My podcast is actually called That Changed My Life. So, yeah, if you guys are here with the intentions of you change my life, that means you have to allow yourself to have that happen. Okay. Are we good to go? Andrew's yawning. Like, everybody join already so
we
that we
got
can get this game started.
25 people.
Okay. Well, you guys got 10 seconds to join. If you're having problems, please speak up. If not, we're gonna start this game, and it'll be very quick, it'll be painless, it'll be fun, and then we're gonna get to the networking part. When we get to the networking part, the icebreaker question is going to be who I am, where am I calling in from, where do I live, what do I do, and what is my hidden talent. Hidden talent's always a fun icebreaker question. And then you guys carry on. a controller in the call or in the breakout room will probably tell you you got 2 minutes, and we'll keep track of time. Every room always has one. Okay, that's it. We're starting.
Ready.
Let's see if you guys are paying attention. The people that didn't join are like, shit, I wasn't even here. I didn't hear half the call. Can't play the
Alrighty.
game.
So there's 3 power-ups at the bottom of your screen. Make sure
Mhm.
you're on your browser if you're playing the game. You're not watching Alex's share screen, because then you won't be able to play.
Okay, so on your browser, there is a remove 2 incorrect answers. There's a double down. There's an extra choice, and the speed in which you answer these questions also matter for points.
Can you make
Eh.
the screen bigger?
Mine. So you're watching. You're not playing. Is that what you're saying?
No, I'm trying to play, but I can't read it.
You have
Oh,
to do that on
that's your
your
browser.
browser. Don't watch Alex's.
Don't
Alex,
look
Wait,
at the Zoom. Look
I
at your
think you're
browser.
confusing people when you
I
share
don't even
screen.
know how do I get to my browser?
It should be Google. So if I stop
Do you
share.
see it now? You go to Google.
Hold on, I can't even get out of this Zoom thing. Oh
Do we
my-
press OK here?
Yes, you'll press OK. Anyone that's sees all the power-ups, press OK.
You guys can start because I think I'm gonna hold you guys up.
No, you're good. You matter. Hit
I
the
can't
refresh button
find it.
on your browser.
Yeah. What does it say?
Did
It
you
should
click the
say-
link?
Did you click the link in the Zoom chat?
Yes, but then it disappeared.
Oh, well, minimize the Zoom.
Yeah. And click on Chrome at the bottom if you're on a Mac or maybe
Oh,
Safari.
oh, okay. Nothing's coming up. I think
Okay,
it's my
click the
computer.
link again. Click the link again, the brightful.me.room.
Hold on. I can't even get back to the full Zoom. Just start. I'll just watch.
Okay, I will share my screen then.
Okay. Okay, I see you in the Zoom. I see you in the game, Brigida, but
Yeah, because I signed up and then it disappeared. Okay, so I click OK. Oh, I think I'm
see, look, you made it. You
You're
made
in.
it.
okay.
see
I
ya.
made it.
All right,
Thank you.
Javier and
Pavlo.
Pavla. Last 2 got to click OK. Make sure you're in your own web browser. Don't look at
They're
Zoom.
probably
Okay.
having the same
Okay.
problem.
All right. What a
Oh.
really.
Not gonna give
Okay,
up
let's
on you,
do this.
Pavla. All right.
Wait. Now mine is messed up. Viewing option.
Oh, this
We're
one.
starting.
Hit refresh if anything. Robert would rather own.
Ooh, I got points.
Wait, why can't I? Okay.
And make
so-
sure you are not on the Zoom screen. You're on your own web browser. If you see Alex's mouse moving.
Everybody mute.
So
You guys know who the controller is here, right?
Hey, Nick, excuse me for a minute. Can you repost what Robert posted in the chat, his contact info and the link he posted? I don't see it anywhere.
Yeah, I don't either. And I don't think he actually put it in chat.
Okay, I will post it at the
Well,
end.
we'll send it in the replay.
No, I'll send
Oh.
it here too.
Or if Alex has it, he can post it.
Hey.
Yeah, if you just put it in the chat tonight, that would be awesome. Thank you so much.
Welcome.
Oh man, that just slowed me down. I didn't get the max points.
Oh, wait. No.
Everybody mute, please.
Yeah.
Okay, shh.
Should play Jeopardy.
Second question.
I'm in 12th place. What?
Do.
I thought you were gonna have the Jeopardy music in the
You're
background.
sharing your screen, so you got to play the music.
I can't. I'm in the game, dude. Don't distract me.
You're locked in.
Oh snap.
Monica and Andrea.
My only goal here is to be Andrea.
Today, Titanic.
What am I, chopped liver? No, because you know I always come in last.
Monica's coming back. Vengeance.
There's your Jeopardy music.
Let's go. Ooh.
Ooh.
Andrew was fast.
That's easy.
Alex, did you use your double up?
You know I did. I used my Nas too soon again. Damn. I didn't learn anything from watching Fast and the Furious.
Alex, that's gonna get you up there. Ooh.
What? How am I still behind
What the
Andrew?
hell?
I don't know. This is questionable, Nick.
Alex, you guys said it word for word. I don't want to hear it.
Exactly.
It's a direct quote.
Blame Robert. Don't blame me. Easier is speculative.
All right. Read the transcript.
Hey, today's 9/11. You make any 9/11 questions?
No, I didn't. I should have.
Oh,
You said to limit it to 10 though, so I had to keep my questions.
oh my
Ooh, Alex,
God.
you've been dethroned again.
I'm getting dethroned.
Oh,
What?
no.
Oh,
What
you
the-
I made a
messed
mistake.
up.
I made a mistake. I made a
Hey,
mistake.
man.
I made a
There
mistake.
goes my streak.
I made a
Wow, there
mistake.
goes my streak.
Yeah, it's hard.
I
It's
made a mistake.
multiple.
I made a mistake. It is multiple.
Why I'm not winning?
Multiple.
I clicked the wrong It's okay. Hopefully everyone got this one wrong.
No, I got it right.
Oh
I got it
my
wrong, but it
God.
looks that I got it right.
Yeah.
Nick, I'm
Nah.
supposed to be like, no,
Wow.
I know.
Armando got it wrong and he got it right.
I made
Nice
it. I made a
person.
mistake. I made a mistake. I was so close. I was so close.
You're never gonna hear the end of it.
I'm never gonna
Armando.
hear the end of it for any question. 1 week I will be 100% with my question. See if this one tripped anyone else.
Oh wait, what?
You guys said it.
Oh God, I read too slow. Oh my God. I drew a blank. 4.4 points. No. That's gonna kill me. On the 10th question. Oh, yep. Yep.
Okay, so
Wow.
technically Andrea should be in first place.
Wow.
Thank you, Alex.
Technically. Technically Andrea should be in first place.
I was always fourth place. Go, Armando. Whoop, whoop.
Hello, I did it all right.
The speed in which you press the buttons also matter.
Oh, the speed matters. Oh boy.
So you have to be a
But
fast
I
reader.
got it all right, except number 2, which I was slow.
Hold on, let me take a screenshot.
Yeah, go ahead and subtract my wrong point. I'll do it, Andrea.
How do the bonus things work?
You can hit, it's the little boosts if you don't
At
know.
the
Yeah,
anything.
mine
bottom.
didn't work.
Oh no.
I should be up on over there with Andrea.
Did you get all the
Andrea
questions?
reads. This is why I'm always saying I gotta beat
Yes,
Andrea
Nick, I
because
got
she
all the
reads
questions right.
faster.
All right, Andrea. Technically, we'll give you the first place on that. I'll remember.
I don't
Yeah,
know.
all
I
good.
think Armando gets the first.
All right.
The game don't lie.
I can't win anyway, so it doesn't matter where I end up. So
Some wrestle for it.
That's
I
true.
didn't know speed mattered.
Yes, speed matters, and the power-ups, the double point, they come in
Hey.
handy.
Listening matters.
True.
Okay, so
Next
thank
week,
you
guys.
guys for that. We're gonna now break you guys out into 6 people rooms. Okay, this is probably not the best time to leave, but we'll see what happens. Yeah, go meet people. Right, Nick's gonna send you out. So hit yes to the breakout room. You guys got 10 minutes to get to know each other and change each other's lives. Go. Nick.
I just opened all the rooms.
Okay,
I was
go.
debating between 5 and 6 breakout rooms. Nobody leave. Join your breakout rooms. Don't leave people hanging. Don't leave people in breakout rooms
Don't
with 1
leave
or 2
people
people.
hanging.
Got this, guys. I regret making 6 breakout rooms now.
Why?
Because every time people are left.
No,
by-
they're going. I believe in tonight's group.
All right. We got people. We got 4 people in each breakout room, except for room 6.
And room
Quick.
3.
And there's 4 people in room 3.
Oh, okay.
All right. They get a little small gathering. Both
Little
Andreas
small
are in the
gathering.
same group. So it's Donna's husband. Cookie Uwa. Join room 6. Please don't leave him hanging. Assuming tonight is multifamily mastery presentation night. Oh, also by recording,